It's certainly been one of those ones that the Chinese and the China trade war has certainly impacted our market. But I think our market's been fairly pragmatic about what is actually happening with the trade war just at the moment. China's obviously putting some tariffs on Australia where they can get things anywhere else in the world. They can get wine anywhere else in the world. They can get timber anywhere else in the world. They can get barley anywhere else in the world. So, I think it's been okay. We do see China forecast to grow by 9% by sort of 2021 and most other countries to grow by 5%. So there still is going to be some heavy growth going forward and they still will need a lot of our materials to potentially to grow. And as we heard Will just talk about, the iron ore story is absolutely going gangbusters at the moment. And that's really fueling a lot of our market.
And it's not just iron ore, actually. Commodities are going gangbusters, and that's getting reflected in the AUD, now 75 cents and counting. What's happening here?
Yeah, look, it's obviously when you're buying iron ore or you're buying our commodities, you have to bring money in or you have to sell US dollars to buy Aussie dollars and things like that. So certainly that 75 cent US Aussie dollar US has certainly been very, very tough, and it probably will continue to stay strong. And that's certainly hurting some of our other US denominated stocks like ResMed or the ones that take currency from the US and then repatriate that back into Australia. But look, I do think that those rising tensions in China are going to create a little bit more or difficulty for our market going into 2021. And I potentially think the black swan event for our market here in Australia for 2021, potentially with the iron ore price the way it's going, is that China might put some tariffs on our iron ore. And that will certainly affect our resource-heavy market here in Australia.